Hey there. Some of you may know me. Some of you may not know me. Some we might have talked. Some of you have heard my name. But anyways, my name's Kenny Simpson, and I'm a mortgage broker here in San Diego. And I'm super excited because I've been looking for this product that just hit your email. So I'm sending this video to you because you probably are in the ADU business. And I finally found a product that we've been looking for. I've been trying to create some of you, for a lot of my clients. I've been hit up, and finally somebody used their brain and we got the product we've all been looking for. It doesn't meet everybody's needs, but it's going to meet a lot of people's needs. So this product is a HELOC that is going to be used for somebody that has a single family residence, one unit, and they want to build and add an ADU back, but they don't have the money. So for example, we can use future value. And then we also have to hit certain metrics. So I want to go through some of the highlights and some of the lowlights and what deals you do not want to call or send me and what deals you want to send me. So number one, most importantly, is that this is going to be for primary residence and second residence only. This is right now is only going to be for single families that are going to add an ADU or a garage conversion. Okay. Number two, when I run these scenarios, if somebody is currently, like let's say they have a VA land that put 0 down and they just bought recently, it's going to be tough. If somebody put 5% down, they just bought recently, it's going to be tough. So what we're kind of looking for, the sweet spot is if a client came to you and they want to build an ADU and they're currently sitting at probably an 80, maybe an 85, but 80% or less LTV on their current value, this should work. The minimum loan amount is probably somewhere around 100,000 and the max loan amount is 750. When you go to 750, just going to be honest, the CLTV combined loan to value is going to be much lower. So you're going to be looking for somebody that really wants to build a crazy ADU. They're going to have to probably have much more equity in their property. My guess is somewhere probably between 60, 70% because it's a very low CLTV. So if you have somebody like that, you got to make sure they have lots of equity in their house already. If not, it's not going to work. Well, if they want to build an ADU up to $500,000, we can use the new value. We'll go up to 95% of that new value. Keep in mind, the higher the CLTV, the LTV with the combined, first and second, the price is going to be hit. The sweet spot to go up to $500,000 is 90% or less. You're going to get much more favorable pricing. So this is all broken down in the email, but another thing that I want to go over with you. So let's just say the current scenario is the person owes $800,000. Their house is worth $1 million. The current CLTV, that means when we look at this deal, they cannot exceed a current value of that value. So if it's $1 million, they could not exceed 125%. So that means the max loan amount that I can give them would be basically is $1,250,000, right? So I know this might be confusing. That's why you look at the chart and I broke down a scenario here. I'm just going through this. This is only a full doc loan. There's no bank statements. There's no stated income, all that stuff. If you're W-2, you're self-employed and you can qualify with tax returns and W-2s and all that. Great. The DTIs are going to be somewhere around 38 or 43. So they got to make money. They got to be able to qualify for this payment. This product is a HELOC. It's a 10-year draw and it's fully, and then it's fully amortized over 20 years. So it's like a HELOC. One of the things I love about this one, as far as from a contractor, is this is a HELOC. So we go out, we get a HELOC. There's no HUD inspector. They are going to look at your budget. They're going to make sure it's real. They're going to look at the future value. They're going to look at the current value. If you hit all the metrics and all the LTVs, they're just going to send that homeowner a checkbook. So that means as you move along in the project, you don't have to have an inspector come out, sign it off, request a draw, get it back. They're just going to write the check to you and give you the money. So it's really easy for you, the client, and you, the ADU contractor that's trying to do this, obviously build with it. So I gave some scenarios on here. You can read about it. You can go over. I also gave a scenario what's not going to work if somebody is sitting at a probably LTV of 95, 85 to 100. Could it work if they have the money to come into and basically pay for the difference of what we can give them? Absolutely. What this will work for is somebody that has, good job, good credit, primary, wants to build ADU, has, 70, 80% LTV. My guess is the ADU build is going to be somewhere around $350,000. A couple things is the ADU would just you'd have to show me plans and things like that are getting done. It would not actually have to be, the permits will have to be finalized to actually get this on some scenarios. So that's the good news is, so if you're far along in the process, you're like, hey, Kenny, this is going to get approved in the next 1 or 2 months. Can we get this done? The answer is yes, but obviously we got to make sure you check all the boxes. They are going to vet the contractor. They're going to vet the budget. They're going to make sure everything aligns. And then if we can get the values and they qualify, we can get the loan done, we're off to the races. These loans can close in about 30 days once we get everything. Typically, some of the struggles they have on this is a couple things, and you guys might know this. So let's talk about some of the struggles they have. And I'll end this video with this. Number one is everybody thinks they're going to build an ADU for $350,000. They're going to get the value back dollar for dollar. I'm not saying you are. I'm not saying you're not. The feedback I've gotten from them doing a lot of these is typically they're not seeing dollar for dollar. So if you're going to have an appraiser go out, we want to make sure that we have the comp support if you need dollar for dollar. Secondly, the other problem they see is that you cannot be a builder owner. You got to have a tight budget. So it's just this upfront of not having the budget, not having a serious contractor, not having the stuff put together. That's no. And last but not least for me is I just don't want to be hammered with 50,000 different scenarios, because I know once I put it out there will be, and that's why I created this tight bucket. So we're really looking for people who have a single family that want to have ADU and they have the equity to do this, even if they have no money to come in with. They can qualify. They have you're their contractor. They're ready to go. They've already moved into the process of either getting the plans and permits on their way, or they're done, and that's it. So that's what I want to focus on. That's the people I want to help. And if you have any questions, reach out. If you have scenarios, please email back on this. Love to help you guys out. And I think I broke down the scenarios very easy. If you have any other questions that I didn't answer or think of, let me know, because I'm sure you will have some, and look forward to it. Anyways, thanks for reaching out, and we'll talk to you soon.